Right, time for today's Bart Chart. Are the euro and crude oil prices joined at the hip? That's the big question I'm asking today. Check out the chart. It shows euro-dollar, the exchange rate, that's the yellow line, and the price of crude oil, WTI, that's the white line. The yellow, the left-hand axis, by the way, is the price of the euro-dollar, and the right-hand axis is the price of crude oil. This is over the last 12 months. What's interesting is the euro is tracking crude prices more closely than at any time over the last 2 years. The 120-day correlation between euro-dollar and generic prices for West Texas Intermediate oil has climbed to 0.4. That's the highest since April 2013. A figure of 1, by the way, would mean the two rates moved in lockstep. -1 would mean they were moving in opposite directions. So 0.4 is significant. Now, from the euro's high last year of 136.92 on June the 30th, that's the yellow circle on the yellow line. The currency then embarked on a 25% plunge to this yellow circle right here. That's March the 13th. 1.04 was the high to the low right there. And that mirrored, as you can see, very closely the drop in oil, the white line over the same period. Yes, the drop in oil was a steeper drop of 57%, but the declines mirrored each other. Now, once oil bottomed and the euro bottomed as well, that's the lower yellow circle right there, the euro started to rise. And as you can see, it came up to here, 113 was the high, 114.51. That was the euro high, the yellow point right there, which I've circled, 114.51 on May the 15th. So they have mirrored each other for the last year. Now, the rationale behind the correlation is the ties between oil and the expectations for consumer prices have strengthened in Europe but weakened in the United States. What it means is the ECB has given more weight to the impact of energy prices on inflation than the Fed. So when oil started falling last year, in the middle of last year, as you can see from that chart, it was one more reason for the ECB to increase the pace of monetary stimulus. This leads to the question, what does this mean for the future direction of the euro, of the yellow circle, the yellow line right there? Given the current correlation, analysts' predictions that oil won't rebound in the next several months are providing some support for the view the euro will fall towards parity with the dollar. For the record, by the way, the median forecast in a Bloomberg strategist survey puts the euro at 1.05 by the end of 2015. Crude oil is expected to reach $64 in the third quarter from $60 today, according to the 37 strategists we've surveyed. So are the euro and crude oil joined at the hip?